Hello traders, in this video I'm going to answer the question that probably a lot of traders and investors are asking themselves today, which is January 21st, 2022. Is the S&P 500 going to reverse? Is it going to bounce off this 200 moving average that we see it hit? I'm going to circle it here with my mouse. So that is a great question to be asking, and I am going to answer that question for you. It's not going to be so much of a yes or no answer. It's going to be a statistical answer. And I think that this can help you realize what type of chances there are of this thing reversing so that you don't just go all in and just throw all your eggs into one basket thinking, well, we haven't seen the 200 moving average in so long. This has got to be it. This is my chance to make it all back, or to retire, or whatever you might be thinking. I always advise everyone to enter into a trade with a plan. So why are you entering that trade? What do you expect to happen? What do you do if it doesn't happen? And if the trade does go in your favor, how are you going to trail the price of that trade? So meaning, let's say that you decide to get in after this daily candle. Maybe the next one makes a new high. Maybe it doesn't. I don't know. But if that's your entry, then what are you going to do if the price actually does go up? Are you just going to sit on your hands and hope that it continues ever higher? I mean, one possible thing that could happen is if it does reverse after this candle, the price could continue higher, break out over this 50 MA, and then come right back down as it did back here. You see that we made new highs in this area at the end of December, the end of the year, basically, came down to the 50 MA. It looked like, okay, here's another opportunity to get in. But what happened? It faked us out and it came back down, and now we're way down here. So just as an example, if you entered for the break of this daily candle, one smart move, I think, would have been to have a stop loss placed on the 50 MA as soon as a candle closed above it, or as soon as a full candle appeared above the 50 MA. So that means your stop loss would be over here. You would have been stopped out there for a tiny profit, almost a worthless trade, but you would not be sitting with a huge loss right now. So that's just one example, and that's what I'm trying to emphasize when I'm saying that you have to have a plan, because you're going to get excited if you decide to buy in for a reversal and this thing does reverse. But what happens if it's just one candle higher and then it continues down much further, as we've seen it do in the past around the pandemic, the beginning of the pandemic? So I'm going to scroll back here. I promise I am going to tell you the percentage chance of the S&P 500 reversing at this point, but all of this is kind of necessary to understand so that this actually has some meaning. Okay, so here we are back at the beginning of the pandemic, the end of February 2020, or kind of late February 2020, and things just started to go south really quickly. Let me get this scaled so that you can see how low it went, because it's running into the volume candles here. So we were trading, let's just say, around 330 at the middle of February 2020, and then maybe a month later we're trading $110 lower. So just some like quick guesstimation, a roughly 30% drop in the market overall. So that's pretty huge, and that's coming down way below the 200 MA. So from here, that 330 level to here is about $300. So that's about a 10% drop, and you might be thinking, wow, we haven't seen a move like that in forever. I mean, if you look at this past daily chart, you just don't see big moves like that. So you might be thinking, well, this is my chance to get in. It's finally come way down, and now I can ride it to the next new high. But look what happens. It only dropped 10% here, and it dropped about another 20% as the days passed. So the idea that I came up with today was, how often does the S&P 500 reverse after coming down to the 200 MA, right? So I don't want to just say every time it touches the 200 MA. I want to say every time that it comes down to the 200 MA, not necessarily from a long-term high. I'll explain that. So obviously this is a descent down to the 200 MA, and then the next one before this, or the previous time that it came down to the 200 MA, was on June 26th, 2020. So let's find that date. So here we go. So you can see here again, the price action is moving down. It touches the 200 MA. Maybe it touched the day before, and then it does reverse. So this is what I am counting as it's coming down, touching the 200 MA, and then reversing and making new highs, which is great, but gives you an opportunity to move your stop loss up to the 50 MA line, and you can maybe you end up break even in a few days, basically, because if you got in, let's say on June 30th or something like that, when the first daily candle made a new high, so maybe your entry is, I'm looking at the high of this candle, 304.61, and then if you just follow the 50 MA with your stop loss, which is just one possibility, you can come up with your own kind of exit strategy or trailing strategy. So 304.61, if you look at this blue 50 MA, you can see how the price gets near that, and then you would have been above break even. You would have been profitable, let's see, on July 15th, and that's with an entry at the end of, so basically 2 weeks later, you're break even, and then after that, it's all profit. And then the trade would be over here on September 11th, oddly enough. So that's just one possible scenario that you could, run your trade with. But the statistical number that I'm going to give you that tells you how often does the S&P 500 reverse in that scenario. It did there, but it doesn't always. Here it came down again, and this is what I would not call a reversal because it comes right back down to it. So I went back 10 years on this chart, 10 years, and I checked every single time that the S&P 500, here's another time where it came down, it touched the 200 MA, and it reversed. Now, if I just point out all of the times that it actually reverses, I could lead you to believe that this is a great opportunity to get in. There's no way it can fail, but that would be so deceptive. Here is a time where it touched the 200 MA and failed. Coming down, touched the 200 MA, failed again. Coming down, touching the 200 MA, failed again. So you can see it doesn't work all of the time. So I'm sure that you guys are used to seeing a lot of trade videos where people just throw out some random numbers and say, oh, every time the S&P 500 hits the 200 MA, there's a 90% chance of it reversing. And I'm here to tell you that is absolutely false. And I just get sick and tired of hearing people just throw out some random numbers. So without further ado, I went back all the way to, let me see, I've got it written down here, June 4th, 2012. So that's about 10 years from where we are right now. And I counted 23 times that on a descending candlestick pattern that the 200 MA was touched, and I counted out how many times this thing reversed and how many times it came back down and either touched the 200 MA or would have stopped you out based on, say, setting your stop loss to the low of the previous daily candle that you entered on, which is a nice kind of safe way to set your stop. So what do I mean by that? Let me just show you that real quick, and then I will stop leading you to this statistic and just give you the number. So let's say, for example, here, let me make this, scale this out so it's a little bit more meaningful. So let's say you saw it hit the 200 MA at this point and you decide, okay, I'm going to buy as soon as a daily candle makes a new high. So that happens right here. So if you bought for the break of this daily candle, then your stop loss would be the low of that candle. And you could see you would have gotten stopped out because there's really no reason to sell through all of this price action. It hasn't made any new highs or anything like that. So I would have probably, if I was in that trade, I would have kept my stop loss there and I would have probably been stopped out here. So actually it was the low of this candle. So definitely would have been stopped out in this area. So that's an example of when it came down, touches the 200 MA, continues lower, gives you an entry, and then stops you out. So that trade would not have worked. So how many times does that trade work over the past 10 years? It works 12 times out of 23. So that's a 52% chance. You could go through if you want to check and see each time. There's, like I said, 23 times where this thing comes down on a descending candle pattern like this and then either reverses or doesn't. So, and I'm looking at entries that are the break of a daily candle after that happens. So if you want to do a similar test, you can yourself. It doesn't really take that long. It maybe took me 10 minutes to go back through the chart, 10 years, and find all those entries. There's only 23 and 12 of them reverse. So that's a 52% chance of success. So what am I getting at here? That if someone asked me, what's the likelihood of the S&P 500 reversing, I would say over the past 10 years, it's done it 52% of the time. So slightly better than a coin toss. Is that good or bad? That's really up for you to decide. What I would suggest, no matter what percentage you come up with, based on any kind of statistics that you check like this. Even if it's 75% or 80%, never go all in on any single trade. Always have a stop loss in place and calculate how much risk you're taking. So for example, if we entered on the break of this daily candle, the high is 448.05. So let's say we put in an order at 448.06 or whatever, and then we get triggered. Well, one place you could have your stop loss that would be smart is at the low of this daily candle. So that means that you're risking about $10 per share. So if you buy 10 shares, you're risking $100. Are you okay with losing $100 if you get stopped out on this trade? If you are, then that could be a reasonable trade for you. If you're not, and you just go ahead and you buy 10 shares because you think, well, there's still a pretty good chance this thing's going to go high, but I hope I don't lose any money, then you're doing it wrong. So hopefully the message is clear here. I gave you a real probability of this thing reversing, 52% chance that this thing reverses. So I'm sure other people are out there and they're going to try to tell you that, oh, I know it's going to reverse here, or I know it's not going to reverse here. And unless they've done any type of statistical analysis on the chart, there's really no way. It's just a pure guess. So at least this is based on actual statistics. And again, hopefully this video is helpful to you. I know there was a lot of talking, but there was a lot to explain. And let me know if you have any questions about this, and let me know what you think in the comment section below. And like, share, and subscribe if you find this video helpful. I normally just do day trading videos. I did one earlier today, but there was nothing to trade, and I'll be back on Tuesday for another trading video. So as always, go into every single trade with a plan. Always honor your profit targets and take your stop losses, and in the long run, you should be green. I flipped that around there at the end, but that's okay. Take care.